the healthcare and so on and so forth. But tech is one where we're really struggling. And the fascinating thing is that vast majority of managers still feel that's a growth area. But the question of growth is, are they growing? And a lot of them are not.
It's hard to fight momentum, though, right, Rajiv? I mean, you would have been on the very wrong side of this trade last year. Is timing a factor for you?
Look, timing matters, and we do look for rate of change of earnings growth. And I think people forget Microsoft went from 50, 60 times earnings in 2000 to 10 times earnings, and you couldn't give it away in 2010, 11. And Applied Materials took 20 years to break even. So I think energy, we've seen significant underinvestment over 7-8 years. These cycles typically last more than a couple of years, and we are basically hardly 2 years into this cycle. So momentum matters, and earnings, obviously we feel that momentum is to the upside if you take a slightly longer term view.
Help us understand the international trade here, because when you look at your funds, your international fund is beating the benchmark. It is doing very well, but there are a lot of risks tied to a lot of markets, particularly emerging markets right now. Where quickly are you selling out, and where are you selling into, given the environment we're heading into?
So if I look at it from a global perspective, our U.S. exposure has gone down, and we feel the non-U.S. looks attractive, and emerging does look attractive in the global context also. And emerging, we're actually very, very cautious on the Chinese corporate earnings front. We do like some Chinese names, but the China is one area where we're not excited at all. Just kind of fascinating to see the reopening. Well, I mean, who expected China to close down for 5 years or something, right? It would have reopened, and reopening trade don't last 5 years. The last few months, and I think we are behind that now. So emerging markets ex-China look very attractive.
Yeah, it's fascinating because you're underweight China, but you're overweight India, Rajiv. Does the India story look as healthy to you now, post Adani, as it did before?
Yeah, actually, in our view, nothing has changed. I mean, I think from an Adani perspective, there's a lot of hot air, in my opinion, because first of all, the banking system is fine because the exposure is under 1% overall system-wide. Most of the banks have 0.5% of books, so I think it's fine. The second thing is these are regulated assets. You can verify a lot of these revenue streams from other places. So I think this is not Enron or Satyam for that matter. I think so. From a system perspective, we're not concerned. I mean, we have to obviously Adani specifically is a different call to make.
You mentioned that you're kind of concerned about the outlook for the U.S. when you're picking individual stocks. I'm really curious. You mentioned this emphasis on energy versus tech, but there's been this huge focus on ESG across pensions institutions across the country. How do you deal with the divergence in views across state lines? And are you getting any pushback as an investor for some of these more traditional energy, even tobacco bets that you're making?
Look, I mean, I think our flows will tell you the story. We play within the boundaries that are prescribed by our clients, and it's a big market. Our job is to find opportunities where there's a disconnect. Look, investing is all about perception, gap between perception and reality. So the fact that 75% of managers don't want to touch energy, and the fact of the matter is that if you go to COP26 or COP27, I mean, vast majority of people are going in private jets. That's not exactly to save the world. So I think there's a lot of ideological belief which is not backed by facts, which obviously is creating an opportunity for us.
What's next, Rajiv? Where are you looking towards? Because obviously you're looking towards the next frontier, I'm sure.
I think we are very concerned about where interest rates are, where they're heading. I mean, inflation seems to be stickier, but I mean, if you look at the software markets, as the replacement LIBOR, I mean, there's pretty heavy activity on next September and December at sort of 6 handle. I think markets are very sanguine, and the fact is S&P is almost 18, maybe 19. Who knows where the numbers are? There's hardly a bargain in a historical context. So there's still a lot of fluff in a lot of areas. So if you look at within S&P, around 40% is tech-centric, whether it's communication like Google or Meta, Alphabet or Meta or Amazon, these kind of names. So we feel there's almost 60%, 40% of the S&P has real problems. Estimates are still coming down. Valuations are not there. I mean, yes, Adobe's gone from 50 times to 25 times, but it's really a bargain when there's a structural sort of risk in some of these businesses now because of AI. So yeah, I think, but healthcare looks particularly interesting, especially if you look at companies like AstraZeneca or United Health or Humana. So there are other stuff that is interesting, not to mention consumer staples and tobacco.
Okay, Rajiv, well, we hope you come back and tell us more about some of those sectors very soon. Thank you for joining us, Rajiv Jain, GQG Partners Chairman, Chief Investment Officer and Portfolio Manager. Do you want to recap a little bit Coinbase's earnings? The stock now after hours up about 1%, but it has been very volatile. We're learning that the company's total consumer trading volume was down 23% quarter over quarter in Q4. And fourth quarter assets on platform also missed estimates. They came in at $80 billion, whereas we were looking for that to be almost $89 billion. We're going to digest these numbers a little more in a moment with New Construct's founder and CEO, David Traynor. Stay with us. This is Bloomberg.
When you choose Comcast Business Internet, you choose the largest, fastest, reliable network. You choose advanced security, and you choose a next-generation 10G network. Make your business future-ready with the network from the most innovative company, Comcast Business, powering possibilities.
After today's EU hearing and announcing 2 deals with Nintendo and Nvidia, how optimistic are you that this deal will go through and get the regulators' approval?
I think there's a clear path forward towards regulatory approval.
So, Bill, what do you make of what Walmart had to say today? Basically, the cost of service is going up and they're having to pay it.
Well, they left out one ingredient. So we look at this and we say, wealthy people that lose money in the stock market, they pretty much keep spending because they did so well the last 10 years. He mentioned people at average and below average incomes, their income is going up substantially. And so they make really good customers. And then there's a third dimension that he didn't mention. There's 92 million millennials that are forming households and are engaging the kind of spending that's necessity based. And as soon as you go to necessities, that's really good for Walmart and ultimately for Home Depot. Home Depot's problem is very simple. It's a category that's going to do really well over the next 10 years, but is temporarily negatively impacted by what the Fed is doing with tightening. And again, the stock market is designed to move money from impatient people to patient people. And if you're in this market right now and want to make a lot of money.
Russia invaded Ukraine in the pre-dawn hours of February the 24th.
1 year ago, the world was bracing for the fall of Kyiv. Well, I just come from a visit to Kyiv, and I can report Kyiv stands strong.
Your outlook did come up short of what the street was looking for, yet you are starting to see a rebound in the stock. As we talk about,
what is your view of what the data are telling us?
Well, you're right that we've seen a bounce back in some activity, particularly the services PMI. You've also seen a pretty big bounce back in consumer confidence since December. A lot of that confidence data has to do with the fact that inflation has come down. And I think the headlines and the headline data on inflation has told us that inflation has come down, but you are right, too, to ask, does the Fed have a services problem? I do think that they will end up having a bit of a services problem. I don't think right now there is a huge alarm bell going off. Obviously, we've got activity coming back, and we've got a decent amount of optimism in the current economic data. But when you look forward about 3 to 6 months, if that services inflation stays high, the overall number is likely to get stuck at a level that is above where the Fed is comfortable. And I think that's really what's giving investors some consternation today. And we're seeing a sell-off in the markets as a result.
well, it's not just a problem for central banks either, arguably, Liz. It's a problem for corporate America. If you just look at Home Depot saying they have to spend another $1 billion to pay people more in their stores. Is this a corporate profit problem too?
Yeah.
For those who don't remember, and thanks for being with us, can you remind us of what the Tepper trade was?
Sure, Jonathan, and great to be with you. Yeah, in 2010, coming out of the financial crisis, the market has started to move up, and there was a lot of angst for the market. And David Tepper came out very succinctly, said we have basically a win-win situation. Either the economy is going to get better, and that's going to help corporate profits and help the stock market, or instead, the Fed will step in, which will also help the economy. So our point of view, Jonathan, is today is somewhat of the reverse of that, in that either the economy is going to get stronger and the Fed's going to stay tighter, as you just alluded to, or as we saw with Walmart today, that the economy will start to weaken, and that will hurt corporate profits as well. So the bottom line is that we think the upside is somewhat capped. And then in the first week of February, we actually took down equities and raised some cash in light of that.
President Putin is in no way preparing for peace. He's preparing for more war. He's preparing for new offensives, and he is mobilizing more troops and sending in more weapons. And that's exactly.
Some of the world's biggest companies had their logins hacked for 2 major data center operators in Asia.
Define the unexpected out there along a burgeoning, reopening Pacific Rim.
Well, there are so many wildcards that are now abounding that it's really hard to know where to start. We can start with the China reopening.
This is WLBT First Alert Weather.
We talk about spring fever when you.
Go to NFLshop.com for a special offer.
You know, most people believe VR is a myth. So we must remember what it is we fought for.
We have a VR Chicago again with the MVP.
Well, according to a Hinds County Sheriff's Office deputy, one person is in custody after this stabbing. Now, it happened at the Askew campgrounds on Askew Ferry Road in Edwards. The victim was taken from the campgrounds to Edwards Bolton Elementary School, where they were airlifted to the University of Mississippi Medical Center. Now, the extent of their injuries have not been released at this time, but again, a stabbing did occur at the Askew campgrounds in Edwards. That person was then life-flighted to UMMC. And the Hinds County Sheriff's Office is still investigating. Of course, we're still working to gather more information, but as we do, we'll be sure to let you know. For now, I'm live in Edwards. Madeline Nolan, 16, WAPT News.
You want to do something meaningful? Here's your chance.
20 seconds. Not good.
We're in.
Oh my God!
Guys, I'm going to be honest. Something must have been going on with the soccer gods today because we had 2 insane.
Ugh.